Hi traders, a very warm welcome to you all. It's Tuesday, 8:41 p.m. I welcome you all to the market outlook for Wednesday. I'm Devang Mehra, and thank you all for tuning in every single day. I'm watching these videos. So if you enjoy these videos, please like, comment, share. It would mean a lot to me going forward. So a lot of learnings today, and I think today was one day that I really enjoyed trading in the market since the last couple of days, and I'll explain a lot of things, and I think it's important that we revisit them today so that we don't forget it in the future. The first point that we discussed was difference between volatility and FII selling. These are things that you have to remember for as long as this selling concept is prevalent in this market. That I made it clear on Telegram and today, last video also, that FIIs, when they go short, they will either come in the morning at 9 o'clock or they come around 2 o'clock. That's the only two times, or 1:30. These are the only two times that they are more prevalent on going short. So if you're a person who's looking for buying puts in a market that is going higher, it doesn't make sense to buy in the middle. That's what happened today. Today the markets did, if you look at the Nifty charts, today markets did try to come down, but that was just a healthy volatility being created. So that's the difference between volatility and FII selling. So if you want to go short in this market, then you wait for triggers. Like, so for example, you saw a very good inside bar formation happening around 1:30, 2 o'clock time. That's one trigger that you can take a short. Same happened with Bank Nifty. If you observe the charts on the 15-minute, you can see that market started topping out around 1:30. Then you got some inside candle formation and the market kept on tumbling down. So that's the difference between FII selling and volatility. For more info, go to the Telegram channel. I'm going to leave a link in the description for you all to refer what's happening in this market. Today, the American markets are doing quite well. The SGX Nifty is doing fine. The Asian markets have closed okay, and the American markets are also doing okay. So let us see how American markets perform today. Are we seeing the market sustaining at these levels, or will the markets like India get sold into? Because that will create a lot of impact how Indian markets open tomorrow, how Asian markets open tomorrow, and how the markets will go forward and trade on the intraday on Wednesday. Remember my words. I think it's something that everyone knows. Wednesdays are known to screw your minds. Wednesdays are known for volatility creation, and we are aware of this slang for the longest of time. I always repeat it. I'm repeating it again right now. Most people lose money on Wednesday more than Thursday. I think more people lose money on Wednesdays. So tomorrow the plan is very simple. You trade only what you see, not what you think. This is one very important thing. For example, you might think that the market is breaking out above 35,000, but let it happen on the chart first, then you trade. And that advice is especially important for tomorrow. So remember that. Secondly, talking about the learnings that we did today, I hope you learned how to manage trades. When you make a view for the longer term, for 1.5 months going forward into January, whenever you make a view for the longer term and you take a position on that longer term view, like we did 34,000 calls, it's very important that you understand that if you buy a call for Jan end, you can't expect market every single day going higher. That's not going to happen. It's not so lucky. So if you buy a position, let us say call or a put for Jan end, you have to accept that you have to have some cash idle so that if something happens in the market, you'll be able to either adjust that position or scalp in the other direction to make up for the loss that has been done. So today, when the markets, today morning when the markets were doing fine, they opened quite a big gap up, and I made some very interesting points. I said when the market starts to go above this level, 16,840, you will get this gap filling on the market, and almost the gap was filled around 950, and then the market, touched over here, and then they became volatile. That was the plan, and this was the first trade that we took in the morning, and you can clearly see how the markets are giving an inside bar over here. So things work very well. Now, when the markets came at this point of time and the volatility was being created, what happened at that point of time was I said at 2 o'clock, 1:58 or something, I said the FII selling can come in. It's something which is always coming in the market. So if the FI selling is coming, and if we are sitting in a 34,000 call option, you have two options. You know one thing for sure, that the FII selling will always happen. So the first option is you book out longs and again take longs when the market comes down. If you don't want to do those things, then it is advisable that rather than doing that, what you can do is you stay in the longs, that you're in the longs, and then at the higher levels like today, you either short the calls or you buy some puts. So that is something we all did today, and I hope that you have made some good money on that. I put up a lot of screenshots on Instagram. I also send a lot of screenshots to you guys on Telegram. So you try to learn this concept that if you're sitting in longs from a lower level, it doesn't mean you have to book out longs here, then go short, then again take long, because we cannot as retailers find out every single turn in the market. So once you make a longer view, you have to manage the trade. And by going long and short with the money that is idle, that is something you should do. So I hope you learned something new. If you have doubts, let me know in the comments. If you're enjoying, please like, share, subscribe. It'll mean a lot to me, guys. So coming to the view tomorrow, that was what happened. And I think after that, I told you the level of 34,531 on Bank Nifty, which worked very, very well. And you can see the markets never went below that. It's a very simple rule. You can use Fibonacci's, even GAN. Both of them agree on the number 50%. So, Bowden, who's a GAN practitioner, he places a lot of emphasis on 33% rather than 38.2%. So what exactly he says is that whenever the markets runs up, that's the first pullback. I did a live video also in the market that's called the first pullback. It'll always get sold into. So this selling pressure either will end at 33% or 50%. And you can see exactly around the 50% mark, the markets stopped and then they reversed. So I told you all, buy some calls again of January. I think the important part that people tend to forget is that it is important to buy if you're bullish, or slightly bullish or not so bearish. It is important that you take a trade in January to realize the full potential of the trade. Because in December, we've talked about it all the time. I did get 2 messages, I think, today about people who became stuck in the calls. On my YouTube membership, I guided one person. I think if you watch me, you'll be thankful to me. He bought a 36,000 call of December end. So I said it doesn't make any sense. Even if you get that momentum, it's quite difficult to get it in a short period of time. Plus, you're sitting very, very out the money. So the advice is you book out that long. You had made some intraday profit. Now, when the market dips till 34,500, then you again enter into long of January. So we all orchestrated this and it worked very well. So now let us discuss how we can plan the markets tomorrow. One thing, if you noticed, India VIX was down 7.5%, which helped the markets not stay down at the lower level for a very long time. I have got the FII number, which is surprising. The FII data tells me that FIIs have sold only 1,200 crores and DIs have bought 1,400 crores. That is surprising after the massive dip of, I think, 200 points on Nifty and about 600 points on Bank Nifty. It's just a 1,200 crore selling. When will this selling stop? That is the question on everyone's mind. And we are heading into the Christmas holidays. Let's see how things go. We don't have any holidays this week. Unfortunately, Christmas is on Saturday, so that means no holidays for us in trading week. But let us see when the FIIs go on a break. I think the break they go for will be till the 8th or 9th of January, till the date when TCS results come out and the markets have some events to look forward to. So we will observe all these things, but very interesting point. Even if you look at the derivative data, I've sent you the derivative data on your groups, and that is a good data, good data that favors the bulls. So you can actually see we are expecting volatility going into this week, especially Wednesday. We'll always expect volatility, but the data that you got in the cash market and in the derivative market is a little bit more skewed to the bulls. So we will see how that turns out tomorrow. But talking about the intraday view now, the intraday view is quite simple. So I think one question I think people will ask me tomorrow, if some, let's say, unforeseen selling happens, our stop loss on Bank Nifty is any 1 hour closing below 33,988. That is the low that has been made. 33,988 is our stop loss of 34,000 calls. So that is something you'll have to maintain if you're in the call with me. Otherwise, if you exit earlier, then you are just doing trading and not holding it for a long period of time. So that's something you should remember if, for example, some news happens and markets fall down tomorrow. So if I open the charts of Bank Nifty, or let us start with Nifty. I love Nifty. So if I open the charts of Nifty, you got an inside bar today and it's closed on the higher end of the bar, which is a good signal. I'll open the 15-minute chart. Just try to understand one thing from the daily chart. Everyone who has gone long in this market, like us, we have a stop loss below these lows. So unless until these lows get triggered, you will always face some kind of buying pressure on whenever the markets fall down, as long as these lows are intact. That is one point. Secondly, on the intraday chart, you can see one very important thing. Like in Bank Nifty, it's quite clear. You can see that the market, fell down it went back up, it again fell back down. So it is trying to form some kind of a double bottom on the intraday or a short-term chart. That's the point number one. So when does the market become powerful? I'm a double top practitioner, and you can expect two things. And I think today's commentary is very similar to what happened tomorrow. Bank Nifty has a couple of important levels. The number one level being 35,200 and another level being 35,000. Obviously, 35,000 is the high of today, which is also the high of the double top resistance, double bottom resistance. So if markets tomorrow go above these levels, that will be the first trigger to go long. The target number one will be 35,200, which is nothing but these highs. And if this starts to break like Nifty today, then you can expect market to come and fill this gap of 35,600. So that is one point that you'll have to keep in mind. Look at the charts of Nifty. It is very similar what happened. On the charts of Nifty, I'll just hide the Fibonacci's. On the chart of Nifty, you can see when this level was broken. It took initially some time to break that level. Look at the first 2-3 candles. But when this level broke, you can see the market tried to fill this gap. So on Bank Nifty, it's quite simple that the view is quite simple that we will go long when this starts to break and the double bottom is completed, and then we will know our first target of 200 300 points, and then we can go till 35,600. But there is a problem that to go to 35,600 you might get this intraday high, but we have a daily magnet, if I'm not wrong, at 35,400. By the way, I'm doing a session on magnet trading that I've been following for a very long time, and sniper entries. So you're always welcome. It's a free session for all my YouTube members, for my seminar members in any city, and my Genesis members. So if you're not a member yet, click on the join button below. We do sessions, live sessions every week for learnings, and we have a lot of recorded sessions that I do to help you in this market by giving you some examples and views that can help you achieve good, effective trading. So that is that. So tomorrow's session is at 10 o'clock on Wednesday. Okay, so one thing that I would like to clear is that, right now, anyone who's gone long has a stop loss around these points, 34,000, right, like us. And anyone who's got short has a stop loss over here, above 35,000. So if the markets are opening over here in this range, yes, there are a couple of trading things that you could do. So for example, if the markets open flat and they start to break today low, some kind of selling pressure can come. I have no problem with that. But the bigger or the better trades will be interesting only when the ranges get broken. I always tell my members and all of you guys also in the Telegram commentary, don't mug up this market. Look at it like, it's like the battle between Greece and the battle between Sparta. Find out where is Sparta strong, where is Greece strong. Think like that. Secondly, think from the perspective, where is the stop loss of buyer, where is stop loss of seller, and then try to look at the market. You will find a lot of interesting observations by looking at that. So if you understand, you might, as I said, you might get some selling below this, but the interesting selling will either come if the markets come down over here, they do some halting over here and then they fall down, or if the market goes up here and gives some inside bar or builds up over here and then it goes back up. So these are two methods or two trading ideas that one can use for tomorrow's market. I always follow this thing called the rule of 1%. If anyone's done any of my programs, you're aware of these things. That's where you apply this now. Rule of 1% basically means that the markets can move only 1% in a day, but that's not how things are right now. Basically, to move above these levels or below these levels, the markets first have to halt. So by using that analysis, or by using my understanding of that, it is advisable that let the markets build up over here or over here and then go short or long. If the market, or if it comes over here, gives an inside candle, then do that. But don't just trade immediately. That is my suggestion. So I think it's important where the markets are opening tomorrow, because that will give us the entire idea. So let us say if tomorrow, if today American markets do very well, and tomorrow, let us say for some example, markets are opening over here, then you have to wait for build-ups on either side. But let us say for some reason markets open at this end of the range, then you don't have to wait for the build-up. You don't have to wait for any consolidation. And then in that case, you can easily trade that breakout. At the same time, if the market opens gap down over here, and if in that case the market breaks this, then again, as you guys know, if the market's in a trend, whenever the lows break, you go in that direction. But I still believe 34,500, 34,000, they are two very, very important numbers. And I believe that they are something that should be held for the next couple of days. So let us see how that works out. So opening is prime. I hope you understood that. On the charts of Nifty, if you can see the charts of Nifty, similar analysis. You have a resistance coming in at this level. You have a support coming in at this level, right? Stop loss of buyers, stop loss of sellers. So all depends upon where you're opening. Let us say you open flat, and let us say you start to go below these lows of today or the opening of today, then you will get some small selling. The idea would be don't short aggressively because you're still in the middle. So advice would be, if you want to go short, totally up to you. On the breaking of these lows you can, and this could be a limited target. We'll not go very big if the market opens flat, but we go for limited targets of the gap filling, which was basically done and completed today in Bank Nifty. So if tomorrow for some reason they open weak and the lows break, you can go for this, what is this, 100 point kind of a fall, 150 points kind of fall. You can try to capture that, but don't go below that. Secondly, what if the markets are opening flat, gap up? Then the advice would be that once this level starts to break of 760, 930, 940, then we can try to go long in this market. So that is these are some important points on the intraday chart that you have to make your mind on. It's very important that you keep on understanding that if you want to go short tomorrow on a flat opening, the quantities have to be reduced. That is a very, very important observation I see on the charts. And I've explained the logic why. Even the VIX has cooled off 7.5%, and the data that has come in is quite good. So I will not like to go short tomorrow in aggressive quantities. At the same time, let us say if the markets open flat, I would not mind to wait how the markets go forward, because currently the markets are in the middle of a very big range. So let the market break this, let the market break this for us to take an aggressive stance once again. So it is advisable you wait for, on a flat opening, wait for some build up and then take a trade. It could also be possible a lot of times on Wednesdays markets might not give moves, and let us say markets open over here, they go back up over here and they start to build up. This would mean that a very good move on expiry can happen. So if you go back and check the expiries, Wednesdays, whenever Wednesdays are very, very sideways, the expiry can give very good momentum. Whenever Wednesdays are very, let's say Wednesdays are very trending, then the expiries, they become sideways. That's something, some learnings that I have. So if tomorrow becomes sideways, it increases the chances of Wednesday to be trending. If tomorrow is trending, it will increase the chance of not getting very good zeros on Thursday. So all remember all these points. Tomorrow all depends upon where markets open. If they open very big gap down, observe, this will be a very, very difficult trade to go short like that. But if tomorrow markets open gap down, observe how markets react at these lows of 16,400. Let them build up and then only go short. But I am looking, moreover, if you look at the charts right now, I am more interested to not short so aggressively, and might be trying a buyer on dip kind of a stance on the intraday tomorrow. That's about it for today. Opening is prime. That's all I want to say. Wednesdays are there to screw your minds. Take less trades and take only confirmed trades. And these confirmed trades, they will only come when the markets break out of these double bottoms. Remember that. Should be enough. I'll be there to guide you in the live commentary. Cheers, guys.